Good afternoon, and thank you for joining the Future of Finance discussion on open banking and open finance. And I shall now pass you over to Dominic Hobson.
Well, good morning to watchers and listeners in the Americas. Good afternoon to their peers in Europe, and good evening to our friends in Asia. I'm Dominic Hobson, co-founder of Future of Finance. It's my privilege to moderate this discussion on open banking and beyond. Open finance, to give it its more all-encompassing title. Now, at heart, open banking is a very simple idea. It breaks down existing oligopolies by forcing incumbents to release data about their customers, with, of course, the consent of those customers, to competitors, so they can use the data to create innovative products and services that are better and cheaper than the ones they have. Now, consumers can sign up for loans or credit cards with the same ease as they can with their current bank, because the new bank has all their transaction history and identification documents in their system in the same way as the old bank. With open banking, consumers just tell their bank to send the information to any bank or any lender they want to work with. And of course, the benefits don't stop, in theory, with new financial products. Open banking is already driving the creation of saving, budgeting, accounting, and what I call shop the market apps. And there is a case for saying that the United Kingdom pioneered open banking. In August 2016, the Competition and Markets Authority here in London issued a report stating that retail banking in the United Kingdom was, as we all knew it was, an oligopoly. The report obliged the 9 largest banks to make customer data available with customer consent via an open banking API standard, which is now available in its 3rd version. Since September 2016, the Open Banking Implementation Entity has functioned, funded by those big 9 banks, to design API standards, encourage banks and challenger banks to use them, and to authorize new apps that use customer data, and of course to oversee the security of the exchanges of data between banks. And the first phase of that new regime came into force in the UK as long ago as March 2017, when the big 9 had to disclose certain information like branches and ATM locations and the terms and conditions of certain products. But since the launch of the Open Banking Standard in January 2018, the Open Banking Implementation Entity has authorized no less than 249 providers that make use of customer data, made up of 175 third-party providers, 74 account providers, and 77 of those regulated entities now have at least one proposition live with customers. January 2018 was also the date on which the second iteration of the Payment Services Directive, PSD2, of the European Union came into effect. And PSD2, driven ironically by lobbying from the United Kingdom, has given data sharing by banks with FinTechs through APIs a huge boost by enabling retail and small business customers to oblige their banks to share account information with third parties and allow those third parties to make payments on their behalf. In fact, open banking, open finance is now going global. There's a privately financed open banking initiative in Nigeria, which is designing APIs and standards to allow data to be shared. The US Department of the Treasury issued a 223-page report, which made favorable references to encouraging open banking through data sharing, although concrete developments are a bit harder to spot in the US. Elsewhere, governments are definitely driving the process, most obviously here in the United Kingdom, but also in Australia, where open banking, or in open finance, really, they went straight to open finance, started on 1st of July, earlier this month, driven by legislation, the Consumer Data Rights Act. In Hong Kong, the central bank has published an open API framework, but it does leave the bank somewhat in control of who gets to see the data. In Singapore, the Monetary Authority and the Association of Banks have published an API playbook to support data exchange between banks and FinTechs. In Japan, the Financial Services Agency has started an authorization process for third-party providers, and the majority of Japanese banks are taking that regulatory stipulation very seriously indeed. Brazil issued an open banking regulation in May this year, and PSD2 is, of course, inspiring open banking initiatives, albeit in some member states of the EU rather more than others. It certainly looks like the Nordic markets are embracing open banking most enthusiastically, with dozens of banks in Denmark, Sweden, Norway, and Finland investing in API technology and partnerships with FinTechs. So, open banking, open finance, which began in a way as an accidental byproduct of competitor investigation, competition investigation in the United Kingdom, and secondarily, but not unimportantly, as an initiative to help create a single banking market within the EU, enabled not by blockchain or AI, but by some fairly old-fashioned technology, namely the API, is now proliferating worldwide. Now, to help us understand where this work in open finance has got to, what opportunities it creates, what's speeding it up and what's slowing it down, and where it might go next, we're joined by 5 people who've certainly forgotten more about this subject than ever I knew. Samantha Seaton is CEO at MoneyHub, an open finance technology platform that provides connections to financial institutions, data and intelligence via APIs and white labeling to enable companies to help their customers to better understand, manage and control their money so it can work harder for them and go further. Gavin Littlejohn is a serial entrepreneur whose current roles include chairing the Financial Data and Technology Association, the global trade association that works with governments and regulators and financial institutions to make a reality of open banking. Rune Mal is also an entrepreneur whose latest venture is the Nordic API Gateway, a PSD2-driven open banking platform, already live in Denmark, Finland, Norway, the Netherlands, UK and Ireland, Poland, Luxembourg, Germany, Estonia, Lithuania, and Austria. Rune is the CEO and co-founder. Felixa De Luca is by training a lawyer who's worked in banking with Barclays and at regulators, both the FCA and the EBA, and at the Open Banking Implementation Entity, the body set up to make a competitive reality of open banking by building the APIs. But now, as founder of Payments Solved, Regulation Unraveled, she's helping firms understand how regulation and technology are going to transform payments. Last but not least, joining us all the way from Sydney is Paul Franklin, Executive General Manager, Consumer Data Right at the Australian Competition and Consumer Commission. He assumed his present role after 25 years in the payments industry with Westpac, Commonwealth Bank, National Australia Bank, and the Australian Payments Network, playing a leading role in Australia's pioneering instant payments infrastructure, the new payments platform, and has now also for the last 6 months led the implementation of Australia's open finance legislation under that same Consumer Data Rights Act. Now, in addition to our panelists, we of course have you, an audience as well, and anybody watching or listening is free to submit a question at any time to all of our panelists. All you need to do is use the Q&A functionality. It's better you use that than the chat functionality at the bottom of your Zoom screen, and you can direct questions to me or to all members of the panel or to a specific member of the panel, and you can do it by disclosing who you are or anonymously if you prefer. And unlike most webinars, I will try to go through those questions as they come up rather than save them all up to the end. So please do get involved and stay involved once you've asked a question. We do want everybody to be part of this discussion. But I'd like to begin now by asking some of our panelists what's happening and why in the countries that they know best. Now, Paul, thank you once again for joining us so late at night. Could you give us an update on what is the current and prospective state of play in open finance in Australia? In some ways, Australia has become the poster child for the way that this legislation and regulation can be used to encourage change.
Thank you. So in Australia, it's known as the Consumer Data Right, and that was due to a decision from our Productivity Commission that rather than just applying to finance, it should be economy-wide. So while we're starting with banking, the Treasurer has just signed a designation instrument last month to extend open banking into energy, which we're working to implement in the future. Over the last 6 months, we've been running an industry testing program with Australia's 4 major banks who collectively have about 75% market share and with a number of data recipients. On the 25th of May, we went live to accept new applications for data recipients, and we so far have about 70 entities who've asked to be able to start that application process and who we've identified in our accreditation platform. On the 1st of July, we launched consumer data sharing with our 4 major banks and with our first 2 data recipients. One of those is a small regional bank who'll be using consumer data right to do income and expense verification for lending applications. And the other one is a personal financial management app. By September, we're planning to be opening up to new data recipients. From the 1st of November, the major banks will be adding loan accounts and joint accounts. They're currently only able to do single accounts. From the 1st of February, opening up to a range of other products, such as foreign currency accounts, trust accounts, and all of Australia's non-major banks have obligations that kick in 12 months after the dates for the major banks. So within a couple of years, we'll have a fairly comprehensive open banking regime with energy to follow soon.
Thank you, Paul, for that very comprehensive update. I was interested on the energy component, particularly. We'll come back to that a bit later. Alexa, could I come to you now and give us a brief roundup of where the UK now stands, more than 3 years on since it all started?
Yes, thank you, Dominic. You've very succinctly summed up how we got to where we are today with the parallel tracks of the CMA order and PSD2. Obviously, bearing in mind that the CMA order was only directed at the 9 UK banks that were subject to the order. It was only about sterling current accounts, whereas PSD2 obviously expanded that open banking ecosystem to all currencies and to all payments accounts, bringing in e-money firms and payment institutions, and of course all of the other banks within the UK and across Europe as well. I think that we're in a slightly holding pattern in the UK at the moment, because we had the FCA consult on open a consultation on open finance earlier this year that was due to close in March, but obviously because of the impact of coronavirus has remained open until October. But that means that the timelines for thinking from the regulator as to the direction of travel for open finance is delayed. We've also had the start of the discussion in the UK about open data. Last year, BEIS actually consulted upon smart data and was due to publish a response to its consultation in the summer of 2019, but we still haven't actually seen that output yet. So the challenge we've got at the moment is that we're well down the path for open banking. You know, we've got really good standards that could be applied to other parts of the financial services sector or to the wider regime within the UK. But we're now waiting, I think, for a direction of travel from our regulatory bodies, which should align, I think, as we evolve to how a market-led approach can actually be integrated into how open finance evolves within the UK.
Thank you, Alex. That's great. We'll come back to that market-led versus government-led thing in just a minute. Rune, you've heard Paul explain that the Australian open banking initiative is actually following some pretty clear timelines. It's got some milestones. It's clearly in train. In the UK, there's some consultations open and still waiting for regulatory guidance, but it's pretty mature by the standards of most markets. Tell us, what is happening in the Nordics? Where has the open banking and indeed open finance initiative got to in the Nordic markets?
Yeah. So first of all, if we look at like the APIs themselves, I would say that they're moving past the maturing stage. So banks, they've been working really hard at creating both compliant, but probably more importantly, usable APIs. Because one thing is like being compliant, another thing is actually having a technology that is vastly usable by the masses. And I think we're getting to a point where it starts to look okay. There's a lot to be done still, but it's actually something that can be built on top of, and people are and companies are building services in many different areas as we see it right now. I know this wasn't the intention from the regulators' point of view. They had like a very clear-cut date, the 14th of September, right? The PSD2 interface should be in place at that time. But I think anyone involved in like technology, innovation and development, they know that every technology has some kind of natural maturing phase. So we expected this from the beginning as an aggregator. And we kind of took the stance of having the market as the focus, right? We think that the market should lead the way and help the regulators reach their goals. So we work very closely with many banks, advising them on how to get past the compliance point and more into the usability point of these interfaces. And I think we reached a fairly successful ground now in Nordics. If we look at the TPPs themselves, I think one thing that is very obvious in the Nordics is that the banks have been very active themselves as TPPs. And many companies or many discussions, they are always about like whether it's the FinTechs that are going to benefit from these APIs and the banks just being like commoditized and so forth. But what we see right now is actually that the banks are driving the TPP agenda in the Nordics. So we had Danske Bank who went live in all 4 markets in the first half of 2018, way before the PSD2 interfaces was in place. They went live on top of our fallback access. And they won a prize for their open banking efforts already in summer 18. And we saw the DNB in Norway launch an app where they said they wanted to build the mobile bank of Norway. So they're using open banking to even address, you could say, competition against other banks much more fiercely than we've seen before. We also see a lot of innovation within, as you mentioned yourself, accounting systems. And I think it's because it provides a real tangible benefit to the end users of an accounting system, right? It removes tedious tasks, manual tasks, and creates a lot of opportunities for business process optimization. And then lastly, we see a lot going on within the FinTechs themselves. There's a lot of different FinTechs that I wouldn't have imagined appearing that we are interacting with these days, from property tech to lending to even new kind of banking services to new bank challengers working on this. And I think one thing that I keep falling back to when I think about open banking is actually that the role of the aggregators, companies like mine, and also companies like MoneyHub or Tink and TrueLayer, is actually that in many ways they are helping to drive the agenda forward. Because as an aggregator, we are in a dire need that these services and these APIs are in a high enough quality for anyone to use them, right? Because we sell them further on, you could say. But I also think that we are driving the agenda of open banking towards open finance. And what we see in the Nordics, the bank clients that we have, they approach us to go further than PSD2. So we have banks where we're working on auto FX solutions with like trading accounts, moving money back and forth between different currencies in many different banks in many different countries. But we also have banks that wants to aggregate all the saving accounts or the lending and loan accounts out there. And we're building like technology for these banks.
Thank you, Rune. Sam, could I perhaps come to you? We've heard 3 different stories from 3 different countries there, all at different stages of development with differing degrees of enthusiasm and regulatory drive and so on. What do you think we've learnt from the experience of open banking so far, which will be useful as this initiative grows and expands into open finance?
Key learning for me at the moment is that the consumer is not going to lead an open banking or an open finance, or probably dare I say it, an open data initiative, even though from my perspective that's the beneficiary of all of this. But once you've actually kicked something off, so once something has started, which I think takes regulatory kind of momentum, then I think it does become consumer led. So and unfortunately I think that's really the stage we're at the moment, which is where regulatory led at the moment. We're not really seeing any push from the consumers, but that's because I think, as Rune just said before, it's just before the tipping point. At the moment, the banks and ourselves are kind of, I guess, consuming all the APIs that are available, working out where the pitfalls are and where they need to be, slightly put right and kind of fine-tuned, which doesn't happen overnight. And then the ones that are there and stable, people are kind of cracking on with and enjoying, so that's brilliant. But I think the real change that we're going to see in the next few years, and it will be worldwide, it won't just be in the UK, is the consumer will see the benefit. And then once that tipping point happens, then it's not going to be financial services or energy companies. It really won't matter. I say it goes from open banking which is 1D, to open finance, which is 2D, to open data, which is 3D. And I think it's not that long before consumers will want to know where their data is, what it's doing, who's got it, how are they using it, why, and once they've got used to that, it'll seem odd that we never had that, but we're not there yet. But I think it's incredibly exciting from my perspective that the consumers are the real beneficiary of all of this. They're just a little bit unsuspecting at the moment.
Thank you, Sam. Gavin, perhaps you could tell us a little bit about F Data Group and what you do, but also give us some thoughts from where you sit and the things you see as to what's actually happening in this area, as opposed to what's being talked about. As Sam says, it's clearly a very exciting development, and it's really in the early stages of open banking, passing into open finance, and eventually into open data and digital identities, and all sorts of interesting possibilities that throws up. So tell us a bit about F Data Group, and then a little bit about what you see actually happening on the ground.
Yeah, so F Data was originally formed in 2013 during the period where we negotiated data access into the Second Payment Services Directive. The business that Sam works for and I worked for were two of the first organisations in the new entity. We were encouraged to set up with the Treasury to give the banks and the regulator somebody to negotiate with. The Trade Association then expanded out, having been through the delivery of the Open Banking Working Group in 2015, where we introduced APIs to operating in North America, Australasia, South America, parts of Asia and Europe. So we've got a fairly good perspective as to what's going on across the globe in the domain of open finance, which is the only thing that we work on. The one thing, I guess, from the conversation I really thought I would focus on calling out was the United States, where open banking started in 1999. The market penetration of services based on account aggregation in the US is many fold higher than in other markets. And it's been until an announcement made last week, been entirely our market-led delivery of those services. The slight complexity is that whereas in Europe, the banks fought against the data sharing aspects for 20 years, the North American banks or US banks embraced it. So from, let's say, 2001, 2003, you could log into your Bank of America website and see your Citibank balance or your Wells Fargo transaction information. And actually what happened last week was a groundbreaking moment in the history of open finance, where the Consumer Financial Protection Bureau announced they were going to reform Dodd-Frank 1033, which is the act which needed to be tidied up to ensure that US customers had rights to share their data and not just the ability to technically do it. Because what's actually been starting to happen in the US, where there's over 90 million people use open banking apps at the moment, was that some fintechs were starting to be blocked from access. And the customer couldn't, like they're able to do in Australia or in Europe, assert the right to be able to share their financial data with a regulated actor of their choosing. And I think if you were to look at New Zealand or Japan, like with the US, they'd started to make great strides forward with the technology, but they didn't have that customer data right to enable the individual business or consumer to choose to share their data, which left the incumbent banks wholly in control over whether or not data access was allowed and at what price point. So I guess they were my kind of initial thoughts on how we've got to the situation we're in here in Europe versus the US.
Well, thank you for that update on the US. I can see that I was out of date there. I can remember the Citi data aggregation app from 1999, but I thought they closed it down 5 or 6 years later and had to set the market back. So thank you for that update. That's very helpful. I'd like to talk a little bit now about what the longer term and indeed short term benefits and opportunities of this this initiative are. And I wonder if I could come to you, maybe first, Paul, because you are in the middle of starting to see the first apps coming through here. Which are the ones you would pick out as being of special interest? And I'm here talking of energy, which you mentioned, payments. We've heard about accounting apps. Rune was very articulate on getting rid of boring manual tasks. I don't know, credit, price comparison, when you listen to Sam, you can see the possibilities are literally endless here. Personal finance, financial advice apps, and so on. Which ones would you pick out as being of particular interest in this early stages of the initiative in Australia?
So I think we're probably a couple of years away from energy being a reality in terms of data sharing. We're just in the process of developing the rules for energy. But for the FinTechs that we're seeing come through the application process now, there's certainly a broad mix. There's a couple of neobanks, a couple of specialist lenders, and payments providers, quite a lot who describe themselves as providers of data services or technology or software services. So it'll be very interesting to see. I think one thing that will become very popular in Australia will be using open banking data to verify income and expenses for lending. That's an area where there's been some regulatory interest from ASIC in the amount of data that banks use to verify income and expenses. And I think once it's possible to efficiently look at a very large amount of data to verify income and expenses, I think there'll be a lot of adoption of that service so that banks can make better lending decisions and more targeted interest rate pricing. Beyond that, I think we're expecting a progression from sort of comparison sites and from product comparison sites to individually targeted offer comparison, and then evolving into development of brand new products and services that we haven't seen in the market before, and possibly enhancement of existing products and services with better customer experience.
Thanks, Paul. We've had a couple of questions which I'd like to come to straight away, but I'm going to come to you, Elixir and Rune, in due course to pick out your favourite apps. But let's deal with these questions first. And I suspect this one from Will Billingsley here is probably a good starting point is you, Sam, where he says, how do third parties put pressure on regulators to open up data? And Gavin, you might have something to say on this. How do third parties put pressure on regulators to open up data into those second and third dimensions? The struggle we've found at AppTap is that consumer appetite is there and value can be offered to service providers and banks, but they won't move until they're forced, something you referred to in the US, Gavin. But Sam, perhaps you have some thoughts on that. This is not going to be market-led, as you said, it's going to be regulator-led. And I assume it's a fintech trying to break into this market and finding that banks won't disgorge the data.
No, so it is an issue because I think without the regulation and PSD2, there is no way we would be where we are today in the UK and the EU. I don't believe it. So it's a shame, but that is a fact. So the fact that Elixir mentioned about the hold on the Open Finance report, that isn't great, and it would be better if we could keep progressing because I think to Will's point, without the regulation, we're not going to get very easy access in terms of being able to do it ahead of the regulation. I think it's very tricky. You'll get patchy. You'll get some companies that will absolutely open up wider APIs to other parts of what they've got, and then but you can't get it across the board. So, but the one thing we have found a little bit of success at MoneyHub actually, which I'm happy to share, is that the reputational damage of the larger providers in the industry is clearly, they're clearly sensitive to it. So we had an issue with one bank that it was just a problem which we'd gone through all the normal channels. We couldn't get anywhere. In fact, part of the reason that we were given is that because of COVID, there was a lot of issues, and so we just needed to sit tight. But of course, when you're trying to, satisfy consumers in a way that is enhanced or is in a different mode of operation, those consumers don't really settle for second best anymore. They want what you have promised them and what you can deliver normally. So we actually enlisted their help because we had about, I think there were 7 of them. We enlisted their help with us to challenge the bank, about the issue. And I was staggered at how quickly the bank then suddenly could fix that problem. Just with 7 customers actually raising their hand and saying this isn't good enough. And so I guess what I would say is that you've got to use whatever you can at your, in your kitty, if you like, whether that's your customers to help you, or for example, even just some of the regulation that's in place through GDPR, and the fact that the customer does have the right to their digital record. So you can use that to your advantage as well. So I think we have to dig deep, but my real feeling for the question that's been asked is that it will take regulation to really open up the market.
Gavin, you mentioned that the adjustment to Dodd-Frank that's exactly what's happening in the US. Did you have anything to add to what Sam has said, that it has to be the regulators which drive this opening up of the data to challenger banks and fintechs?
So I think the regulatory authorities in the UK are very clear that they see the benefit to the end customers of opening data properly, following what has happened in India and Australia and more recently in Brazil, into more of an open finance and broader open data initiative. There's a couple of things that are worth calling out, one of which is we've got this rather surreal loophole that has emerged where as an end customer, I can choose to share my data with my payments data with an actor that's regulated under PSD2 and have my data adequately protected by the technology and also by the liability framework that requires the fintech role to look after the customer if things go wrong, such as the customer being hacked. I can get all of my other financial data from the customer using a whole variety of other technology techniques out with the regulation and have no cover in place whatsoever. So I think the regulators recognize that because the data pertains to the data subject, that creating some kind of consistency to how that data is looked after from a liability perspective would seem to be reasonable and what the customer would expect. The second thing is the way it's been implemented by the regulatory and technical standards in Europe under PSD2. We found that some other data assets have been blocked by technology implementation by banks where the data was never blocked by regulation. For example, for years in apps like Money Hub, for example, and a whole variety of other players around Europe, firms have been able to access things like loan data, mortgage data, savings account data via the old technology and pre-regulation. And now they can't do that because the banks have put in place a strong customer authentication gate on the front door, and it means that the getting of that data has been blocked. So I just, for no reason other than to create some sense, the regulators are definitely going to have to act. Leaving it in its current position is just, a job that's clearly only half finished.
Thank you, Gavin. I was thinking to myself, a very important point you raised. If I was looking at my utility bills the other day, oil, gas, electricity, and broadband, I'm thinking, wouldn't it be great if there was an app out there which could automatically find the cheapest offers across all these things for me all the time? And there is such an app. But the thing that makes me nervous about using it is exactly the point you just raised, Gavin, which is that data security point. Now, Rune, perhaps there's some Danish experience or some Nordic experience here, which is relevant. What would be your? Well, you mentioned that the banks are really getting ahead of the fintechs in the Nordic markets. They're taking this bull by the horns and looking to outstrip the challengers, if you like. So, does that mean that they are trying to avoid the dilemma which we've heard about? Shall we disclose our data to this organisation which might keep it away? by being better than the competition, or are FinTechs struggling to get at bank data in the Nordics?
I think there's some truth to the statement about like that the regulatory part has to uphold strict standards for like what data is being shared and so forth, because it's, if you have to provide these interfaces totally for free, which the banks are actually enforced to do, there's no real incentive to make them truly great. It doesn't really make sense to do that for free, right? So you always have to like work with banks from several angles in order to have them understand the value of providing an interface that actually lives up to the expectations and also the regulators' expectations and even the RTS of PSD2 and so forth. And I think they are actually doing that. So the interfaces today provided by many of the banks in the Nordics are at a level where you can use them for competitive purposes, which is actually the whole idea, right? To create a level playing field. And I think that the banks is not like moving ahead, they're just moving together with FinTechs on not being obsolete in the game of open banking, because I think what could happen is that banks, they end losing the interface to other players out there, which is like the first level of disrupting, right? That's disintermediation. If you can put yourself in between a service and then be the service yourself, then you can also choose what kind of offerings you provide to end customers. And I see banks moving really fast on that agenda, and I think that's the way to do it, because the more the banks themselves are active within this space, the more they realize that they need high quality data themselves. So we actually use actively the banks that we have as client, which is like Danske Bank, DNB, OP Bank, Ressourcebank from Sweden, and Jyske Bank from Denmark. We use them also when we approach other banks about their interfaces, but we also talk about their interfaces with them if they're not like living up to the standards. And in terms of who's going to win this game or who's creating the best app, I think just to kind of sum up many of things I heard, I think the winning apps of the future that uses open banking is apps that are creating real beneficial context for end users. And I think like creating real beneficial context for end users will drive end user demand, because that's how it all started. The PSD2 framework came out of services like MoneyHub or Spear, which is our consumer service that we had since 2010, like fetching data from banks and aggregating in Denmark. And we had like Tink in Sweden, and we had banking in France and all that, right? So the consumer demand was actually there because they got benefits out of using those services. But I think the first wave of open banking has been very much about the ones that wants the data and not the consumers. So a good example is many banks, they started doing aggregation. Like, hey, you can aggregate all your accounts, but what's the fun of that? Okay, I can see my balance in one app, great. But the moment you add payment initiation to the account aggregation part, you provide real benefit back to the end users, right? Now they can do everything from the app they choose to use. They can pay their bills, they can move money from one account to another, regardless of what bank is behind the account. And what we see is once banks, for instance, they add payment initiation to the open banking solution that they created, the usage goes way up, like tenfold up in terms of who's adding their accounts. Because if you only add the accounts to be able to see the balances, it's way too much giving the bank the advantage as a customer of the bank, right? You're providing them with all the data about yourself and you're not getting any other benefit than being able to see the balances. That's not enough. So I think like the ones that can use like simple payments or faster and safer and more convenient payments, or automating tedious tasks, or even provide better opportunities for end users, those are the services that are going to be used in the future. And it doesn't really matter if it's a fintech or a bank or any startup. And I think that down the road, we will see open banking submerge into any sector out there, because it's just data, right? And the two last data silos, I've been saying that for a while, is financial data and health data. And over the years to come, we will see those being domesticated, just like any other data source that we used to be using. Like we don't mind like adding a service to Facebook or to Twitter or whatever, right? We're used to doing that. The same will happen within the financial data and also in the health data. And the real relevance will be when any service out there can facilitate the end user with data. So if I provide my data for some context, it should be protected by GDPR. So I know that it can't be misused, and it should provide me with real benefit back as an end user.
Thank you, Rune. That's great. I'm getting a strong theme here. This isn't really about banks versus fintech at all. It's really about consumers and about data and how far this can go. Elixir, I know you wanted to contribute, particularly on the regulatory framework. So please go ahead. For some reason we can't hear you. Are you still on mute?
Can you hear me now?
Yes, we can hear you now, yeah. You put the microphone out, not your ear. Right?
It helps, doesn't it? So thank you. I agree with many of the comments that have been made by everybody on this panel. I think that it's really important when we think about the move to open banking, open finance, open data, that we place. I know we're waiting for the regulators, but it doesn't stop industry from having this debate. And for me, there are, I think, many unanswered questions. Are we going to be in a situation where we want to be an API first open data economy? Are we going to be asking the questions about reciprocity? If you want to take data out of the data economy, should you be putting data in? I know that's something that Australia has thought about as it's thought about its consumer data right. Should that be addressed? What's going to be the regulated activity? Because at the moment we have PSD2 and we have a regulatory framework, and that can be expanded quite easily to the rest of financial services. So if you're giving access to savings data, mortgage data, investment data, pensions data, but what about the wider economy? Is that an appropriate regulatory framework if we're talking about aggregating or access to mobile phone data or utility data? And I think that there needs to be sort of a real consideration of these high level points. You know, for me, I absolutely think that there should be a single regulated activity of access to data. The question is who that sits with and which regulator that sits with, given it's going to cover so many sectors. And these are the things that set the framework for the data sharing economy, in addition to addressing the pain points that we see today. I mean, to me, it makes absolute sense in the UK that we've built an open banking framework. We should utilise that framework that we already have as we move into open finance and open data. But we need to fix the things that are not right with it. We need to fix the pain points and not just replicate those across into these new open data economies. And I think that there is then the overarching regulatory framework, which will allow industry to build the apps that are useful for consumers and businesses. And we shouldn't forget about the business. I think there's a whole underserved sector of businesses that over the past few years have seen great value in the open finance, open banking ecosystem, as it brings to them new services, new lending. And I think that that's an untapped area going forward. But I think that it's going to have to be not just a mandatory, you must do this. I think it's got to be more of a, this is the regulatory framework. And for those firms that are going to participate in this environment, these are the rules that we expect them to play by and adhere to. And that then allows for that collaboration, hopefully industry, to bring the products to market that are going to benefit the consumers and the businesses.
Excellent. So we've got lots of questions coming in, so I'd like to deal with them. The first one is for you, Paul. It's from Peter Smith. It's in the move to open finance in the UK, what are the key data challenges and hurdles we can learn from Australia? We've just been listening to a number of people referring to the fact that this isn't just about open banking or even open finance, this is about open data. And we need regulatory certainty, we need governments to step in. You've got this Consumer Data Rights Act, you've been there, you've done it maybe. What are the lessons you'd offer, not just to the UK, but to other countries?
Thank you. Well, I'll take it as a compliment. If anything, Australia has certainly learned a lot from the open banking implementation entity, and we've picked up a number of standards from the UK. So I guess we're a little behind the UK in the adoption of open banking, but we will be, I think, very quickly moving to lending products, and I think we'll be fairly early on the adoption of energy. I guess there's a lot yet to be learned about our experience in Australia. It's very early days, so I think one thing that there is a good case for is regular communication between the open banking regulators around the world. We speak regularly with OBIE, and I think given how quickly open banking is developing, I'm very keen to see convergence of standards as far as it's relevant around the world. That has the potential, I guess, to deliver internationalization of some of this data. One of the challenges we are very focused on, which we haven't had to solve for banking, but we do have to solve for energy, is the question of how do we identify a customer where there's no regular digital interaction between the consumer and the provider. In banking, we know that every customer either has or can easily get a digital identifier that they use to log on and see their data. In energy, it's just not something you do. So we're looking closely at how the problem of digital identification can be solved. We don't want to solve it within the consumer data right program. We're looking to see that solved elsewhere, in either within government or in private enterprise.
A yes or no question. Are you excited about digital identities in general then in Australia?
Yes, we're very interested in them. There's been a successful pilot program from the Digital Transformation Agency recently, and the Australian Payments Council has a framework for digital identity, but neither of those things is widespread adoption yet, so there's certainly an opportunity. And I think there's a kind of a chicken and egg problem that you need a useful new service for which digital identity is necessary, but you also need the solution for how to apply that digital identity.
Maybe energy provided. Anyway, let's look at another question here from Gary Evans. Do you see the contextual detail of data provided by banks increasing anytime soon? Categorizing bank transfers as bank transfers is effectively useless for affordability evaluations unless you have the context of the reason the money is being sent. Savings versus for bills versus paying someone back should all be treated differently. In other words, the data which FinTechs and others are seeing doesn't really tell them much about what's going on. Sam, is that a problem you've come across with clients that you work with?
Well, I'm a little bit, I'd like a bit more information because being able to tell someone's transferring between their accounts is one thing, but you know, you can tell what people are doing with the money when it leaves their bank account. So I think the more important thing here is being able to categorize the long tail of transactions. And that is not something that all categorization engines can do. And it's something that we've been very conscious of, because if you want to provide good I&E or good understanding of whether someone can invest, then you really need to understand the discretionary spend versus the committed spend. So to me, that's what's really important about the data, is how good are you at being able to tell and limiting that grey bit in the middle in terms of what people have got discretion over spending and what people are committed monthly to spending. And really that, to me, opens up an enormous number of opportunities to help them in terms of whether it's lending, investing, or even telling them what's the next best thing to do with their money, you know, without putting them at risk of actually misleading or misguiding. So I think that's probably more, you know, that's what we've found anyway, that our clients are looking for that discretionary versus committed spend. I don't know if that answers Gary's question. I'm not 100% sure.
Yeah, well, I'm sure Gary will come back.
Maybe I could just add something there, Dominic, if I may. So for companies like Money Hub, who've been in the market for a decade, they have learned to read the transaction descriptions that come through in the bank account or credit card statement, and have developed a categorization capability that would say, okay, you've shopped at Tesco, therefore it's a grocery purchase. For participants that are coming new into the market now, they're going to have to go through the process of learning how to categorize and building a categorization engine, or there are a number in the market that they could choose to hire. So there's a number of firms who've been in the market a long time who are now renting out their categorization engines to new entrants to enable that to take place.
Can I add something too? I think what Gary also asks about is like the level of details provided for each transaction through the interfaces. And what we see there is that many banks, they provide way too little details, especially when you go to PSD2. PSD2 is a relative framework. It's not absolute in any way. So many companies like ours, but also banks, they end up in what we call interpretation fatigue mode, where just like trying to interpret what they should put in the PSD2 interface is actually a hard task. And it's even harder for guys on the outside to kind of assess whether they have all the right things there, because in PSD2, it states that banks should provide aggregated, combined information from any channel that they already provide the end customer with should be provided through PSD2. So that means if they provide some fields in the web bank and others in the mobile bank, it should be the combination of all those fields that should be provided through the PSD2 interface. And that's not necessarily how banks, they read that. So many of them provide exactly as you say, Gavin, what more or less looks like the CSV file of transactions, right? So you get like the date and the amount and the transaction text. And guys like us then learned how to read a lot from those transactions texts. But there's still more information in there, and there's also a lot of information being required to be put in there. And we work really hard on that with banks, but it's not an easy task. And I think this is where regulation probably fails a lot, because all of a sudden regulation also enters the field of technology, right? And regulators doesn't necessarily have technologists on the teams to assess these interfaces in these ways. Leaving it up to the markets, which is really hard, because then we end in a situation where TPPs, they have to go through the tedious process of reporting to FSAs and then being black box because they can't read the answers from FSAs. Many FSAs, they don't even provide answers back on the validity of those reports, which I think is a real issue. So that's why we chose to work directly with the ASP SPs, as they are called, like the banks or whatever provider there is for the interface, to solve the issues in the market instead of solving them through the regulators, and then informing regulators about what we solved afterwards.
Yeah, but I think Gavin probably raises a good point. I think if we're going to embrace open finance, I think we have to be, I'm going to say, more innovative. I think we do have to accept that the data is not consistent, is not always going to be completed. So to your point, Rune, I think in order for us, we have to innovate. I mean, that's why I think the FinTech, that's why I genuinely think the FinTech, you talk about the banks, giving the FinTechs a run for their money, but there's only so far they'll go. I mean, because they run out of steam is how I put it, not because they want to, but because that level of innovation isn't there. So for example, in when we do a transaction, we will take in the date, the timestamp, the amount that has been spent, what others are doing, so that you can, so for example, I mean, to Gavin's point, if you go to Tesco's, actually, if you spend £7 between 12 and 2, that gets categorized as a lunch. It's not groceries and it's not fuel. Whereas if it's actually between a different amount at a different time, actually it's more likely to be fuel. It's not even groceries or lunch. So I think there's a certain amount of onus on us as the innovators to kind of like, forge that path forward, because we've got the technology to do that. And I think that's something that we have to kind of rise to that challenge. And also I think for open finance to work, you're never going to get everything in an API standard across all of the different sectors. And I spoke to one energy company recently, and they're considering not charging for electricity. So Dominic, I mean, talk about swapping your providers. I mean, this company is talking about giving electricity away for free and actually building an ecosystem. So that's the trade, that's the value the consumer gets, is free electricity in return for an ecosystem that they can build and develop a revenue stream from, which is not going to be paying for electricity. Which, you know, I think to this community that's listening, that's why I would challenge you to stop thinking about it as open banking, stop thinking about it as financial services, and start to think of it as being, you know, consumer-focused initiatives. And once the retail sector wakes up to the power of the data, I think, you know, financial services are going to be left way behind. I say it every time, that we have the ability to, we're in front at the moment because we have the closeness to it, but we won't stay there at this rate.
Amazingly, we're almost running out of time now, but I'd like to deal with some more questions. And perhaps, Lexi, this is a question you might be interested in. Is open banking, you've heard a lot about consumers, just now from Sam in particular, is open banking going to create value only for consumer banking? Are there any credible open banking use cases to create value for corporates?
I touched upon this before. I think that actually businesses and corporates are actually underserved as it is today, generally in the banking sector and also within the open banking ecosystem. And I think that as we move forward and as we see more maturity in the market, we will see more products within the open banking ecosystem that serves corporates, and that will expand as it becomes open finance and open data, in that all of the services that are useful for you and I as consumers are also useful as businesses. But there are other services, if you think about the sort of the invoicing, the trade that businesses have to do, that will benefit from the analysis of, you know, account data in order for innovative firms, and they may be FinTechs, they may be the banks themselves, they may be other corporates, to actually provide those innovative services into that ecosystem. And so I think it's an underserved area today, but I think that will change and move forward. And I think partially that's going to be driven also by the economics of it all, because you're more likely to be able to charge when you serve corporates than when you serve consumers. So I think that's something that enters the debate as well.
Thanks.
Can I add to that?
No, don't actually, because I'd like you to talk about something else here. Because I don't understand this question, I think you might. Will payment initiation via open banking gain traction and adoption? How do we solve for aspects such as frictionless SCA and dispute management to make PISP, is that correct? PISP yes. Payments attractive to consumers and merchants? Do you understand that question?
Yes, I do. PISP is Payment Initiation Service Provider. So in terms of adoption, I think the easiest way to answer that, we went from serving around 10,000 PSD2 merchant payments monthly to now more than 250,000 monthly on just two clients alone. So it's speeding up, and we have like 5 or 6 payment gateways that are customers with us that are implementing account-to-account payments on their platforms, because it has like a simple, real clear-cut benefit for end users, but also for the businesses. They pay less, and end users get more security because of SCA, Secure Customer Authentication. In terms of streamlining Secure Customer Authentication, I think it's important also to remember that here in the Nordics, for instance, we actually have solid national ID schemes in place. So we have like Bank ID in Sweden and Norway, and we have Easy ID in Denmark. And that means that people are really used to be logging on with national ID schemes already. And what they do is they do an app switch, and then they swipe to identify themselves, and then they're back in their banking app or in their FinTech app or whatever, right? So it's actually fairly convenient already to perform these payments. And I know that it's not like this everywhere. So there's a lot to be worked on there. We are working very hard on like biometric information, so you can use your Face ID and stuff like that. And we actually had banks that had it in their own mobile banking experience. They were forced to add it to their PSD2 interfaces. So we now can provide something similar as like traditional mobile payment means, and compete even further with the cards. So I see a lot of traction in that field. And I also think that's one of the areas that we focus a lot on, because I think within the next couple of years, everyone will be paying with their account. It doesn't really make sense to keep paying with a sensitive credit card where you store too much information online for someone to fetch and misuse.
Thank you, Rune. We had a couple of questions here about data aggregators. Michelle Cracknell's asked, what is the optimum number of aggregators that a consumer should have to choose from? I guess, can the market be too competitive? We also have a question here. Where is it? Sorry. I'm trying to find the data aggregation. There's a lot of discussion about I seem to get down the page. No, the question seems to have disappeared now. But what about that one about optimum number of aggregators a consumer should have to choose from? Is there a sensible answer to that question? When your market's competitive enough, Nelixa, you're laughing there. Do you have too many data aggregators?
Can I just say that I don't think you can look at it like that. It doesn't matter where you go in the future, you're going to expect decisions to be made that are based on your data correctly for you. Whether, like, I think Paul, you mentioned, better interest rates, better. I suspect everyone will have their mortgages up for auction. Who cares who you've got your mortgage with? If someone's going to offer me free electricity, the payments. Why would anyone pay extra to make a payment? I think what we're missing here is it's just going to be normal, and it will get easier. You look at how online shopping started. That's how we've got to think of open banking. We've just started, and I'm telling you, we're just going to expect companies to deal with us. We're going to expect them to have hyper personalized services for us. We're not going to want all the rubbish served to us. I dare I say it that Google searches, where you get, what does it go, you won't need to do it. People, just-in-time services and products will arrive at your doorstep, when you want them, how you want them, because between the concept of the data we've got and the AI technology that's coming, that consumers aren't going to have to do much at all, and we don't like doing much. We love everything automated. Convenience is king. So I think we're looking at this a bit the wrong way.
But the question wasn't that about, like, for the field to be competitive, how many aggregators should be within the space?
Yes.
Like for it. So, and in that sense, I would say, like, from own experience, we were probably the first to roll out like clear-cut stellar connections for all banks in the Nordics, and we were alone for a while there. And then we had like Tinks and Neonomics and Nets entering the scene. And of course, it puts price pressure on your own services, which I think is good, because that forces you to innovate even further to figure out how to make your own money. So I would say that there should be like a healthy bunch, probably the same as if you look at how many banks should be in a market for the market not to be dominated by one player. And even like there shouldn't be like just one player with like 80% market share, because then we are back to like them setting the prices and all that. So I think there's nothing different about the aggregators in Europe. And I have a spreadsheet where I follow all the aggregators, and so far I count like 56 aggregators in Europe alone, which I think is really, really healthy. It's not about like there should only be one. I even see we have guys like Fractal in UK. If you know that company, Ask Fractal, they do aggregation for business accounts, and then they provide like cash flow analytics on top of that, and specialize within this. So that's a vertical aggregator, right? And I love that part, that we can have like verticals and horizontals spreading through Europe, but also someone just serving really well a local market and winning by doing that.
Anyway, we're pretty much out of time, so we're going to have to stop, and I can see we could go on talking for some time. But we have a couple of things I'd like to draw people's attention to. Paul has very kindly pointed out that if you want to know more about what's happening in Australia, there's some great informative videos at cdr.gov.au you could look at. there's a comment here about your point about data, Sam. Isn't it the consumer's data? And isn't the AISP required to share that data under GDPR for free? Is that right? Yes or no, Sam? You have to share data through an AISP under GDPR?
Well, I would argue we haven't got the right to share a consumer's data. The consumer decides who they share their data with.
Okay.
So,
yeah. Right. And now just a final question to each of you in turn, just to wrap this up, because I think it's quite an interesting one. It's from an academic. And his question is, what are the two most interesting questions you'd like academia to study and feed back to the industry? Thank goodness you've come in, Alexa. I think everyone else, I don't want to draw the short straw here.
Well, for me, the main one is, given all of the effort that's gone into open banking to date in the UK, why is consumer uptake still so slow? You know, I personally think there are many factors that contribute to that. But we talk about a hockey stick moment. We talk about new services coming into the market. But there does seem to be, to me, some sort of underlying factor that we haven't identified as to why we're not seeing a greater uptake of open banking services, given all of the, you know, innovative services and apps that are out there already targeted at consumers. You're on mute, Dominic.
I was wondering what your best guess as to what the obstacles are. Is it data security? Is it customer ignorance? In other words, just lacking knowledge of what's out there? Or is it lacking digital identity, one of the things which Paul referred to? All of those? Yeah. Okay,
I think it's all of those, definitely. But I don't know if it's just all of those, or if there is just, you know, is it just customer inertia?
Now, Paul, we must let you go to bed soon. It must be well after midnight in Australia now. What would you like our academics to go away and think about?
Well, so I think we're definitely at the stage of early adopters, and there's a long way to run. But I think one of the really interesting challenges that's worth academia exploring is the issue of social inclusion in the digital economy, and how do we deal with the people who either for social or economic reasons don't engage with the digital economy. Because I think as open finance and open data becomes ubiquitous, there's a real issue that we need to address of making sure that it's genuinely inclusive of everybody.
Rune, what would be your two topics you'd like an academic to investigate to help the industry progress?
I think the priority number one would be how to facilitate health-related research through transactional research, like how to use financial data to actually further the healthcare studies that we already do. Like, what is a healthy lifestyle? What kind of profiling can you do from data that could help you detect whether people they end up with specific diseases, but also like profiling in terms of disease outbreaks. We did a study together with the Danish Serum Institute to identify local outbreaks. So if 10 persons went to the hospitals with a stomach flu, then if you look through their transactions, could you find the same kind of pizza bar they went to 3 nights ago? Because then that could be the disease outbreak center. Like, how can you use financial data to actually further healthcare related problem solving? That's my number one. I'm really, really interested in that aspect. The other part would be, how can you use the whole opening up of data to actually provide even more security? Because if you look at like AML and money laundering issues today, many banks, they are obliged to provide like AML for themselves and their own accounts. But now that we move more and more into an aggregated worldview, how can we across accounts, across banks, identify fraud at an even better level than we have been able to do before? Because there's a real chance to actually do that right now.
Thanks, Rune. We seem to have lost Gavin, so let me know if you're there still somewhere, Gavin. I can't see you. Sam, perhaps a last word from you as to what your two hot topics for our academics to go away and study and report back to you on would be.
So I think, and Alexa, I think it would be, for me, a little bit your point about about the distribution, because I think there's two things that, well, I think, but I don't know, it'd be lovely to know a bit more about it in terms of that take up, because my feeling is that a lot of people don't understand the benefit of open banking. They don't understand it's for them, but I don't know that for a fact, but I think that is a big part of it. So unfortunately, the beneficiaries of it at the moment are the early adopters. And I would argue, sadly, probably the people that are benefiting the most from it at the moment are the people that don't need it the most. So, they're people that are interested in their money, are good with it, want to be on top of their finances. And so therefore, they're what I call the ex-spreadsheet world, going onto the apps. And so they're already kind of good with their money. I'd love to, wouldn't it be great if we could reach more people that are not so good with their money, where this could really help them because it's convenience driven. So I'd love to know more about that. And then the other one is really around, is there a tension around all the fear factor around technology and fraud and online transactions and all of that fear that's growing, and yet a lack of understanding that where we are at the moment is equally, if not sometimes more accessible to fraud than if you move forward to the next era of technology and protection. So just the tension between kind of the media and what people take in and reality.
Thank you, Sam. Well, there you are, Marcus. You've got lots of ideas there. Consumer inertia, social exclusion, and Sam touched on that again. I think we talked about distribution, and these things are going to people who don't need the help. It'd be good if people are not good with money, getting apps as well. Data security, fraud, fear, and of course healthcare from Rune. But I think we really must stop there, and particularly let Paul go to bed. It's all we have time for, but I can see we've really talked about this for more than an hour, but are just scratching the surface of this topic. So I think we're going to have to come back to it, particularly the bigger picture stuff here about what a data-driven, consumer-led, market-led economy actually looks like. I'm taking away from that a very big and exciting theme. But let's stop now. I just want to thank our panelists, Sam Seaton from Money Hub, Gavin Littlejohn, we lost him at the end there, but many thanks to him, particularly for his information on the US. Rune Mal thank you for joining us. Are you in Stockholm? Well, no, you're in Copenhagen, aren't you? Right? Yeah. And we'll certainly be talking to you again very soon. And Alexa, thank you as well. And thank you very, very much, Paul, for joining us so late at night. And thank you, our audience, for your brilliant questions and all the input that you gave us. And I hope we've got to all of your questions, and look forward to seeing you at another Future Finance webinar very soon. With that, I'll wave goodbye to you all. So give us all a wave. Thanks. Bye-bye.
Thank you, Dominic, and thank you to our panel. If you would like to see the summary of this discussion, please visit our website on www.futureoffinance.biz. And indeed, if you would like to see the video again, that is also on our website. Many thanks.